Happy Monday, folks. Anthony Speciale here with Speciale Analysis, unedited and on the edge of the market. Now, I hope you all had a wonderful weekend. We are, of course, going to start the week off with our major market update. Why do we do this? Well, simply put, having an overall direction of what we're anticipating for the week ahead is incredibly valuable. So that's why we start off here each and every week. So we're going to look at the Dow, the NASDAQ, the S&P, the Russell, crude oil, gold, dollar index, cryptocurrencies, at least Bitcoin. So we're going to jump into all these real quick. It only take a couple minutes, but at least it gives you a little perspective of what we're looking at and what we're anticipating for the week ahead. Now, what I also do in this particular video is share with you if there's any trade setups on that particular set of market assets. And in fact, there is one brand new one for this week. So we're going to talk about that as well. What are we going to do tomorrow? So why not get excited about it now? Tomorrow, we're going to talk about the open positions that we're monitoring. So I'm pretty excited about that too. If the market continues to sell off, I'm anticipating some of these positions to get filled since we are biased to the short side. We want to kind of stay on the side of the trend. We're going to talk about that too. So without further ado, let's jump in and take a look. Open up my chart here. We'll get to business. So what you see in front of you is a picture of the Dow Jones Industrial Futures contract. This is the YM, so this is a continuous contract. It rolls over quarterly. What you're seeing is a span of 2020 through the futuristic of 2023. And basically what you see in front of you is a handful of structures. And what do these structures represent? Well, they represent support and resistance. The two key things that we as traders need to be able to identify in order to measure risk and measure reward potential. And then be able to employ a trade plan. Without the trade plan, without knowing where the support and the resistance is, everything else is kind of worthless. I hate to say it that way, but that's kind of the way it goes. Like, you have to have a complete and utter understanding of what you're looking at. That is what I do for you because that's my gift to you. I am here to share this all with you so you have this great insight for yourself, for your future, for your trading. So, taking a peek at what we see here. We've discussed this now for about 2 weeks, and this black channel extension structure has been key to holding the market up. But what we experienced this week is not only a break of, but a settlement below. And that is what triggers our trade plan to come into play. When we get what I call a 1% blueprint, 1% beyond, a settlement beyond, whether it be above or below, a structure on a weekly basis, meaning we're looking at weekly candles here, that is the trigger for our trade opportunity. How do I measure that? I go to my little ruler here. I measure from the channel structure to the close of the candle. And you can see roughly we have about 1.89% worth of confirmation. I need at least one. Personally, I want more than one. I don't want to be right at one because I know that still leaves opportunity for things to not go as well as I want them to. I want more than 1%. It is what it is. That's the way I work. That's my function. There are over 7,000 assets to trade in the market. You can always find an opportunity. Always. So with that being said, I don't need to take things that are questionable. I need to take things that meet my trade plan. Because I know, statistically, my trade plan offers me somewhere between 80 to 90% accuracy based on studies using this 1% blueprint. So it is incredibly valuable to employ this. Now, don't get me wrong. If you can't do the analysis correctly, the 1% means nothing if you're not measuring the 1% off of the right areas. So that's the important part as well. Not only employing the 1%, but employing the proper analysis. And that's what I do for you each and every week. So we know that we have met our criteria for a short opportunity. Now, what am I going to do with this situation? So for me, when I enter a trade and my target continues to increase my reward, that means I'm trading with the trend. The trend is down. As time progresses, this support structure gets lower, 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 lower until it meets this lower channel here. So it could keep going on for quite a while, for at least 5 or 6 weeks. And in that position, my reward keeps getting bigger, 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 and bigger, which I'm completely happy with. What else happens? Well, this channel structure coming down is resistance. So as time goes on, the resistance also comes down lower, 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 which lessens my risk continuously. So for me, this is favorable. We want to be on the right side of the trend. Now listen, when the market's in an area like this, going sideways, it's kind of hard to do that. But when the market is trending down like it is now, just like it was trending up here, we know what side of the market to be on. And how do we know that? Well, if our structures are pointing down, the trend is down. If our structures are pointing up, the trend is up. So here's our shorting opportunity. Come in right here about 31,200. I have a target at 29,600 and a stop placed at 32,700. Meaning if the price retraces up to 32,700, this trade has essentially gone bad. I have to get out there. I have to abandon it. Whether it turns around and goes in my favor or not, that's where I have to abandon the trade. Like that's where in my trade plan, that's where I determine that this trade is no good anymore. I have to step away from it. So I'm going to cover this a little more in detail tomorrow when I go over the open trades, as I normally do on Tuesday. So stay tuned for tomorrow. We're going to cover this one in a little bit more detail. I'm going to break down the analysis a little deeper for you. So I want to get through the rest of the markets. NASDAQ did in fact break this black line that I've been talking about, but did test support at the same time. I would have to trade to support to book my profit. I don't want to trade to support that's already been tested, essentially. So if we get a break this week, hypothetically below this teal channel, then perhaps we could trade to this black channel. We'll have to see if we can create a larger amount of reward than the amount of risk that we'll have to take. So we'll have to weigh that one out. But for right now, definitely a sign of weakness that we broke this black channel that we were reactive to the week before. Buyers were in control. Sellers are now in control. We'll see what happens this week. Even if price retraces back up, now this channel should be known as good resistance and should hold the price and push it down again. We'll see what happens. S&P 500. So again, broke the black channel that we talked about past couple weeks. This is where the buyers were in control. Tested it, but closed above it. Tested it again, closed below it. However, we have a channel structure just below it. We did not get, this is not 1% here. How do we know? We measure it. We go from the channel structure itself to the close of the candle, and we don't even have 0.75%. It's about 0.5%. So for me, that's a no trade. Because this may find support and push back up. It may not, and it may push lower. But I'm okay. Let's just say hypothetically next week or this upcoming week, Friday, candle closes somewhere around here or somewhere around here. Well, I get the chance to trade all the way down here. I'm good with that. So I'm not going to rush it. I'm going to let the trade come to me. I'm going to remain calm, collected, and disciplined, and we'll approach it when or if the time comes. It's that simple. Again, there's 7,000 different assets to trade in the market. There's no reason to force trades. Russell, 2,000. Closed just at support. You could see it's literally sitting on the line there. Nothing to do. We'll see what next week brings. If we get a settlement below here, we get 1+%, then, we could have the opportunity to short this market. But at the moment, I do not see anything actionable. Again, we literally settled the week basically sitting right on support. We'll have to see what transpires next week. Guys, it's been wild volatility. There's always huge upswings in a down market. So, we just have to keep that in mind as well. Crude oil, another difficult market lately. But you can see we are trending to the upside. We continue to hold this area of support, but we do have this resistance that we have yet to settle above, this 114.83. It's an old high from many years ago. We need to settle above that by 1+%. And if we do, we can now then consider trading towards the 2008 high, considering making a double top at 147. So there could be a really nice big gap to run. We're just not there yet. Still waiting for confirmation. Gold futures. Touched on last week that the setup for the short was as it's displayed here. However, little bit of reward, big amount of risk. For me, this doesn't work. Essentially, the price action has simply now retraced, has tested old support, which is now new resistance. We'll see if it flops over and rolls down, or we'll see if it pushes up higher. But as you can see, the gap between the stop and the entry is huge, and the gap between the entry and the target is awfully small. It just doesn't work. And as you see, as time goes on, what happens? Your risk gets bigger and your reward gets smaller. It means you're trading against the counter trend. It is what it is. I'm just pointing it out to you. This is a learning experience for all of you. But this does not meet my criteria. And I have previously shared that with you, but I just want to touch on it again. Dollar index. So this has retested the COVID-19 high, which is right in around this pocket here. This is March of 2020. COVID-19. Here you go. We popped out, closed above, did not get, if I'm not mistaken, a full 1%. About 0.5%, 0.57%, so a little more than 0.5%. So again, this does not constitute a confirmation. We need 1+%. Look at what happened when we didn't get 1 full percent. We rolled over. We don't want to take trades that roll over. We want to take trades that continue. Are we always going to be right? No. Statistically, following this 1% confirmation, using an accurate form of analysis, 80 to 90% success rate. It is what it is. You can't argue with the numbers. These were done by economists, these studies. I didn't do them. And finally, Bitcoin, US dollar, exhibiting some weakness again. We already filled this short here. We sold it off here on a Friday. We bought it back about 26 and change, roughly. We gave this a little bit of a gap. Came down and literally touched to the penny where we had indicated support would be. I never adjusted this line way after I drew it. I promise you, you can go back, look at my TradingView account. It was right there. It is what it is. When you draw it properly, the price is reactive to your analysis properly. It's just that simple. So you can see, here it is, tested it, bounced back up, but we are exhibiting weakness again. So we're going to see if this continues to sell off or what it does from there. I do have a trade idea on Ethereum. I'm going to share that with you tomorrow among a handful of other trades that I have to discuss with you. So if you are available tomorrow, please, when you get the email, 9 a.m. Eastern Standard Time, carve out a few minutes throughout your day, open it up, open the video, take a look, because I have a lot to share with you. Just as I do today, I do tomorrow. My goal is to bring you value each and every day, actionable information that you can put to work each and every day in the market to give you an edge that you'll need to be successful, the edge I didn't have that I needed to be successful. I am now here to share with all of you. So guys, with that, I appreciate your time today as always. If you enjoyed this video, if you found it useful, if you found it informational, even if you found it entertaining, below it, if you could like it, share it, subscribe to it, the channel, I would greatly appreciate. You could share this with as many folks that have an interest in mastering the market as possible, because I am doing this 100% for free. That's right. All the research, all the marketing, all the internals, all the externals, everything I pay for out of my pocket. I do it to give back 100% for free. So with that, have a beautiful and blessed day. I appreciate you all again, and I look forward to seeing you tomorrow.